Cerebras Systems co-founder and CEO Andrew Feldman. Andrew, welcome back. It's great to have you.
Hey, thank you for having me back. I appreciate it.
It seems like we should probably tackle the gross margin story first. That seems to be getting the most attention today. Is that misunderstood, that guidance?
Yeah, it is misunderstood. You know, we laid out a plan at the start of 26. We shared that plan as we went public a few months ago, and we're beating that plan. What we announced yesterday was that record revenues for the quarter, 191 million. We announced a beat on gross margins, and we guided to a raise for the full year, both in gross margins and in revenue. So I think it's not going to be a straight line. One of the things we'd explained to people was that there is so much demand that we would rent back some equipment from one of our largest customers because we wanted to keep our customers happy and continue to deliver compute to them. That's in line with what Greg Brockman said. There is an enormous demand for compute.
Go ahead, sorry.
It was, we raised full year guidance on gross margins in our core business by about 10 points.
Yes. So can it be most easily explained? I mean, you may not want to name them by name, but is it about OpenAI sort of ramping? Is that that's what explains Q2?
Look, we have dozens of customers that are demanding huge amounts of compute. OpenAI is obviously the largest. In addition, we signed and will soon be delivering compute for AWS. Customers like GlaxoSmithKline. We do a big business with the U.S. Department of Energy. We do business with Figma and with Block and with AlphaSense. I mean, the really interesting companies across a wide swath of the economy. Everybody wants more tokens. Everybody wants more tokens. And we had a choice, and we could pass on the demand, or we could keep our customers delighted with our extraordinary performance by renting some of our own gear back and taking a slightly lower margin in the next several quarters, while at the same time doing better than the plan we'd laid out at the beginning of the year.
How quickly do you think you can ramp those other customers outside of OpenAI, and how much do you think is that filtered in already into the street's estimates?
Well, we signed a big deal with AWS, and we're proud of our work with them. We announced at yesterday at the earnings call that we had completed all the definitive agreement with them, and would begin a collaboration, which involved building a solution that contained our hardware and their hardware to deliver not just the fastest but the highest throughput tokens. That will take shape and be sort of in our numbers in next year. It's not currently in anybody's forecast, as it's just happening now. But I think as we look out, there's so much opportunity, there's so much demand that we are doing our best to meet it.
Is there another type of Amazon-like contract as well in the works for you?
You know, we had a $1 billion contract with our strategic partner G42, and signed a contract north of $20 billion with OpenAI. Those are not everyday events. Those are rare even in our industry. Our partnership with AWS will give us reach to sort of every enterprise in the world uses AWS in one form or another, and that's a tremendous way to get our blazing fast inference in front of the world's enterprises.
Right. Sorry to almost cut you off there. I'm curious what you make of the stock price today, down at about 15.5%. How much of that do you think is around earnings? How much of that do you think is around just the lockup expiration?
Yeah, we chose to be innovative in the lockup expiration. Traditionally, everything unlocked on the 181st day, plus or minus. That was, I think, a legacy and served nobody well. We chose to titrate out our lockup with pieces at the first day and pieces after the first earnings call and pieces after the second earnings call to try and smooth out the path. Whether that's a success or not, we'll have to see.